So we are back once again on our compliances video, and we thank God for the ending of the year. It's a festive period, as you can see from our video background. Yeah, and we are ensuring that we keep you informed, enlightened, educated. Even though there's celebration everywhere, businesses are closing for the year. But for us as Young Consulting, we are always at your service to give you the best that we have been ensuring that your business is well positioned, is strategically positioned to deliver its mandate to the stakeholders, to the customers, and every other stakeholders. So as we have been bringing you compliances, both general business compliances, CAC compliances, tax compliances, we also know that businesses to do some certain things in their normal operation of business so that all their goals and target and objective will be able to realize it to their best potential. And of course, as you are making the money, you also pay the right taxes to the government so that your business will not be tagged negatively. And of course, every business owner wants to preserve the reputation of their business and their name. So in today's video, we are bringing you a very practical way on how businesses can calculate their profit, both individual business name, SME sole proprietorship, partnership business, company, whatever the categories of business that you fall under. In this video, we'll be giving you practical on how you can calculate your profit. And remember, it's just how many days? It'll be like 10 days, 12 days to the end of the year. And you want to take an inventory of how your business have been able to, results, the performance of your business for the year. So in this video, we are preparing people for next year, preparing clients, businesses for next year. So we'll be happy as we have been, delivering these services to you freely on our YouTube channel, which you can watch. We have even brought you video that, if you don't know the kind of business you want to do, you can come to our YouTube channel and you can get the kind of business that you can do. So we've been helping a lot of businesses and we've been acting as a business support partner to business owners. So that is why we are here once again as we are rounding up the year. So you come with me in today's video. Please ensure you subscribe to our YouTube channel. Please subscribe to our YouTube channel because you have a lot to benefit on our YouTube channel. We're a chartered accounting firm. We are a versatile consulting professional service firm. And when you work with us, in fact, from our YouTube channel, with all these videos we are bringing to you, you see a lot of things that will benefit your business if you stay true and keep to all that we are telling you. So we can serve as a tax consultant, as your outsourced accountant, all your compliances, CAC, taxes, keeping your books and your record, your financial structure, building a template for your business, training, and any business compliances at all. You can reach out to us because we are the best in our industry, in our field, and you can reach out to us any day, anytime to serve you. So in today's video, It is a very simple video, but then it is very, very useful and important. If any business owner watching it can adopt all that we are dishing out in this video, it will really, really benefit. So, and all the video that we are bringing to you are practical ways on how you can conduct your businesses. As you can see in the YouTube, in the presentation, practical ways, SMEs, even though we say SMEs, but it applies to every business, any business at all. So practical way SMEs can calculate business profits, small businesses in Nigeria. So business owners, entrepreneur, individual business, you can have a simple practical way on how you can calculate your profit. And the best way that we normally advise clients, ensure that all your transactions are recorded. Use business account. Don't use the individual account. Make sure that that business is registered with CAC. We are here to help you to register, to formalize your business. Once your business is registered, we'll process your thing for you if you want us to, and then you start transacting from your business account. And then when you are sending payments, always put a description. This payment is for purchase of goods. This payment is for diesel expenses, transport expenses, salary expenses. So always put narration, so that when at the end of the year you want to calculate your tax returns, you'll be able to do all those allowable deduction expenses and then know the profit that you make, actual profit. Then you will now know whether you are within the threshold to pay tax or you will just file without paying. So that is the essence of keeping business record and then source documents of your business transactions. So definitely, profit is total income minus total expenses. The income that you generate, either on a monthly basis, quarterly basis, yearly, of course, your income comes from your daily sales, from your daily, invoices that you are sending to your customer and they are making payment for. That's your income, your total income that you generate, minus all business related expenses. So when you minus it, you get your profits. And then we need to let you know that we have two types of profit. There's what we call gross profit and there's what we call net profit. The gross profit is the profit that you arrive at before you deduct all your expenses. It is the profit that you arrive at after you have removed your costs of goods sold. But then there are still expenses that you still need to remove before you now arrive at the final profit. Then we have the second profit, which we call net profit. So this is the profit that you now remove all the operating expenses, administrative expenses, any expenses relating to the business at all, you remove it. And then you arrive at your final profit, which we call net profit. So it is this net profit that will now determine the amount of tax that you are going to pay, which we call tax liability. Are you going to have tax liability? Are you not going to have tax liability? This is where it will be determined from. So the step-by-step breakdown of calculating your profits. So, for example, you make sales on a daily basis. Even if you don't have accounting software, which we do implement for businesses, you can use Excel, simple Excel, to keep daily track of all your income, or whatever you are earning, all your sales, keep it. It really help you a lot. So calculate all your total income, your daily income, daily sales, weekly sales, monthly sales, and of course, it is this daily sales that will translate to weekly sales. Then weekly sales will give you the monthly sales, and the monthly sales will give you the yearly or annual sales. So for example, sales of goods, if you are into physical goods, so whatever you are selling, keep record of it. If you don't have accounting software, keep it in an Excel. Have an Excel template. We can help you to build Excel templates. You can reach out to us. Fees for services, for those that are into service business, like us, into service business. So keep all the fees that are coming in, which is your income as well. Then other businesses income, other income that you are earning outside your primary revenue generating sales. It is also part of your income. So I'll give you a practical example here. Sales for the month, you have 1.2 million. So that's what will give you the total income for that month. The total sales in the month that will give you the total income for that month. Then we have lists all business expenses. As you are recording your income, also record all your business expenses, because it is that business expenses that will be used to reduce your tax liability. It will be allowed for tax deduction purposes. You earn a revenue of 1.2 million, and then you need to track your business related expenses. If you don't have, of course, you don't necessarily need to have hard copy of the expense, of the receipt of all your expenses. You can have it digitally. That's why we are also tech inclined. We are tech inclined because we don't even work, physically with business as such. Some of our clients are spread everywhere, right? And we cannot be going physically everywhere. So we track all their business related expenses digitally. That's part of what we also do at Position Consulting. We bring technology into your business for efficiency. So we have common expenses like cost of goods. So definitely, before you can earn your sales, your income, your revenue, you must have purchased goods, or you must have paid for one service to generate the fees of that service. Purchase of raw materials, purchase of finished goods, if you are into final finished goods. So that is cost of the goods sold. Then rent, which is part of expenses, staff salaries and wages, your power, which is the electricity, generator fueling, the diesel and all of that, internet and telephone expenses, transportation, you need to move from one place to another, marketing and advertising, you run ads on Facebook, on Instagram, on Twitter, on YouTube, anywhere you run your ads, or maybe you have an advertising agency that run ads for you. It's part of your expenses. Repairs and maintenance, there are some repairs and maintenance that you will do as you are running your business. You must keep record of it. Then your CAC filing, annual basis, is part of business expenses. Your tax related expenses, your professional fees, it's part of your expenses. You need to keep record of it. So for example, we have cost of goods sold as 650,000. Rent on a monthly portion, 100,000. Then you have your salaries, 150,000. Utilities and others, 50,000. So the total expenses is 950. You need to know what is the amount of your expenses. And you'll be able to know whether you can manage it, you can reduce it, all of that. The total expenses will now be 950,000. Then you now calculate your profits, your revenue minus all your total expenses, which is part of your cost of goods sold. So we have 1.2 million as your revenue, then 950 as your expenses, your total expenses. So when you minus 1.2 from 950, you get 250 as your profit. So you now be able to know, oh, in this month, I was able to generate a profit of 250. Totally, how much profit were you able to generate from first month, second month, third month? How much profit were you able to generate? So when you keep all those track record, you'll be able to know how much you generate as profit, and now you can strategically position yourself to do more. So you have 1.2 million, total expenses 950, and your profit will now be 250. We have quick tips for SMEs to separate business money from personal money. Personal money. You don't want to do business with me and you are sending personal accounts to receive payments for the business you want to do for me. I may not be able to accept it. So that's why when you are doing business, lay a solid foundation, and that's what we are doing at Ozone Consulting. Register your business with CAC, do all your tax registration, and then you open corporate account. Then you have a digital template, either Excel, on the cloud, Google Sheets, that you will now be recording all those business transactions, your sales revenue, all your expenses, and then you calculate, you now know what profit that you make. So we have record income and expenses daily. Of course, it must be daily on a daily basis. How much revenue comes in, how much sales invoices do you send to your customers. Then as you are sending it, you also record all your expenses. So you can use Excel to do that. So use simple tools like digital notebook. We won't even advise a hard copy notebook, physical hard copy notebook. No, use it digitally. Use it digitally, because anything can happen to that notebook. It can get lost. You may be looking for it, you will not see it. So use it digitally. Digital platform is safe. It's safe. Once you use the correct password and everything, nobody will enter into it. Nobody. Then Excel, like I said earlier on, you can use Excel. Google Sheet, of course, Google Sheet is in form of Excel. You can use it. There are also notes of Google on the cloud platform you can use. There are mobile apps like Wave, Odoo, Zoho. You can use it. So this will really help in tracking all your business transactions. Then the extra information here is that gross profit is sales minus cost of goods sold. This is not your real profit. We said it earlier on. The net profit is your real profit. That is what will determine whether you will pay tax or not, if you are within the threshold or you are above the threshold. So net profit is gross profit minus other expenses. So the net profit is your real profit. We have what we call profit versus cash flow. Some business owner, they don't know the difference. And here we are trying to explain the difference of profit and cash flow to you. So for you not to be confused and for you to be convinced and have a proper understanding, profit is what business is making. It shows whether your business is making money or you are not making money. That is what profit shows you. Of course, if it is profit, you are making money. If it is not profit, you are making loss. So it is calculated using income and expenses. Us as accountants, we call it income statement, comprehensive income statement. That's where you get your profit or loss from after you have done your sales revenue minus your cost of goods sold, then less other operating expenses, then you arrive at your net profit. It includes credit sales, money received or not yet received. Of course, if you send invoice to your customer on credit, it is still part of your sales, just that it is a credit sales and not cash sale, because we have two types of sales. Credit sales, the one you send to your customer, you'll be expecting money maybe in the next 1 week or 2 weeks or so, depending on your agreement with them. Or cash sales, pay on delivery, pay before service. So that's how profit is. Then what is cash flow? Cash flow shows whether you actually have cash. This is cash flow. And then in that cash flow, we have cash inflow and cash outflow. The cash inflow is the money that comes in into your business, while cash outflow is the money that goes out of your business. And the inflow can come in form of your sales revenue to your customer, while the cash outflow will go out in forms of payments to your suppliers or the provider of product or services, product or services. Then cash flow tracks money received and money paid. It is all about cash. No credit sales. It is all about cash coming in and going out. It determines if you can pay rent, salaries, and suppliers. This is what determines it. So when you are preparing your business accounting records, you must take cognizance of your profit or loss account, which we call income statement or comprehensive income statement. You must take cognizance of your balance sheet, which we call statement of financial positions. And then you must take cognizance of your cash flow. So each of these accounting reports has their own meaning, definition, and purpose. For profit or loss account, you all know that it is what determines whether you make profit or not. For your balance sheet, it is a statement of financial position, to know your position of your assets, your liabilities, and the owner's equity. While the cash flow, as you have seen it, is what shows you whether cash is coming in, how much cash is coming and how much cash is going out. So we have simple example. You sold goods worth of 500,000 on credit. Expenses were 300,000. Your profit definitely is 200,000. Your cash flow is zero because no money has come in from the sales of the goods. So no cash collected yet. So it is zero cash flow. Why profit is showing 200,000? Cash flow is showing zero because the selling of the goods was on credit. This is why businesses fail even when profitable. So you must be able to have cash in your business. Cash does not mean physical cash. Of course, cash in your bank account. So the key takeaway here is that profit is not equal to cash in hand. You can be making profit, but there is no money. There's no money. Always track receivables and payables. What are receivables? Money that your customers are owing you. Your payables, money that you are owing your suppliers. You must track it. You must have a schedule for it. Rely on bank balance alone. Don't. You must track every transaction and information. Then review profit on a monthly basis, even weekly basis. You must review all your profit. So this is what will help your business to succeed, and that is what we are bringing for you at this time as we round off the year. So we are Tozon Consulting. We are rooting for your business. Feel free to reach out to us to be your business support partner, to do all your business compliances for you professionally. And you can reach out to us on all our contact line, WhatsApp, email, on our website. We are on our social media platform. Make sure you like and subscribe to our YouTube channel. So until we meet again in another video, keep making money and profits and tracking all your business related transactions. My name is Oluwatosin Madam, a chartered accountant. Until we meet again in another video. Bye for now.